We will now proceed into session one, and this is on mobilizing investment to support energy transition, presented by SMBC. And now, to deliver this keynote address, ladies and gentlemen, I take pride in inviting up on stage Minister of Energy and Mineral Resources of Indonesia. Please welcome His Excellency Arifin Tasrif.
Minister of Trade, Second Minister of Trade, Industry and Minister of Manpower of Singapore, His Excellency Mr. Tan Sileng, Director General of IRENA, Mr. Francesco Da Camera, also Deputy General Director, Ms. Singh, and then also distinguished speakers, participants, ladies and gentlemen. Good afternoon. Again, my deepest gratitude to Minister of Trade and Industry of Singapore and Director General of IRENA for inviting me in Singapore-IRENA high-level forum. As the core of climate mitigation actions, energy transition towards cleaner and more sustainable energy systems play a key role in reducing carbon emission. These transitions are essential parts for achieving green and global sustainable economy. Therefore, the Government of Indonesia remains committed to support the acceleration of energy transition development, especially through several policies and strategies such as the first, increasing renewable energy development, prioritizing on solar PV with three main programs, namely installation of solar rooftops in government buildings, social service offices, business offices, industries, and households. Large-scale solar PV development to reduce generation costs and utilization of floating solar PV in existing lakes and reserves. In addition to that, we also continue to maximize geothermal potential capacity by conducting government drilling collaboration with state-owned companies and expediting geothermal development, expanding existing power plants, developing small-scale power plants, and utilizing infrastructure financing for geothermal development and resources risk mitigation. Second, reducing the use of fossil energy through early or gradual retirement of fossil power plant, converting primary energy from fossil fuels to renewable through the desalination program, substituting fossil-based primary energy or final energy with renewable energy such as biodiesel, co-firing, and refuse-derived fuel. The third, expanding the development of supergrid, connecting islands around the country to ensure every new and renewable energy resources are all integrated and fully utilized. Fourth, we accelerate the growth of electric vehicle ecosystem and increasing electrical appliances used in residential and industrial sectors. As the energy transition is rolling, the need for investment will increase even more in the long run. Indonesia is blessed with enormous resources of renewable energy. As the fourth largest country in the world, Indonesia has a prospective domestic market for renewable energy and abundant manpower resources as well. In order to attract more investment on renewables, the Indonesian government is providing various facilities, both fiscal and non-fiscal incentives, such as tax allowances, import duty facilitation, as well as tax holiday. To mobilize the investment, we also continue to explore new forms of financial instruments, such as energy transition mechanism. The scheme with sources of financing from multilateral banks, including concessional loans, blended finance, for the stimulus of renewable energy incentives. Private sector, institutional investor, and long-term investor with low fees and interest. Apart from that, we do realize that regulatory framework is essential to accelerate the renewable energy deployment and ensure the success of our energy transition. The government develops relevant regulatory framework such as improving electricity supply business plan, or we call it RUPTL for the next 10 years, 2021 to 2030, to be more environmentally friendly with composition more than 50%, say 52%. As well, we also prepare presidential regulation on renewable energy tariffs and carbon pricing trading. Distinguished participants, to conclude, I would like to underline that Indonesia's effort in transition journey requires the support and assistance from all partner countries and international organizations such as IRENA to ensure the fund, technology, and capability needed to a low carbon energy future. Therefore, I do sincerely hope that this forum will be a useful avenue in re-envision our energy system and strengthen our cooperation in facing various challenges in achieving energy transition and net zero emission target. Wish you all healthy. Thank you very much.
And thank you, Your Excellency, for your sharing. Thank you. And now, ladies and gentlemen, for the next keynote address, we'd like to invite His Excellency, Dato' Lim Jock Hoi, Secretary General of ASEAN. Here is his speech.
Distinguished delegates and participants, good afternoon. I congratulate the Energy Market Authority of Singapore and the International Renewable Energy Agency, IRENA, in convening this timely high-level forum. I thank you for the opportunity to address the first session on mobilizing investment to support energy transition. Facilitating an effective, inclusive, and just energy transition is a diverse developing region such as ASEAN is not an easy task. The region has historically leaned on fossil fuel for its growing energy needs, but is now facing mounting costs of disrupted climate and the need to adapt. Nonetheless, we have collectively set ambitious energy intensity and renewable energy targets relative to our current capabilities and resources under the ASEAN Plan of Action for Energy Cooperation. This was reinforced by our energy ministers adopting last month the Bandar Seri Begawan Joint Declaration of Energy Security and Energy Transition, which expressed ASEAN's future intent to explore an aspirational long-term regional target towards lower emission energy systems. ASEAN surpassed its energy intensity reduction target for 2020, and we are more than halfway our aspirational 2025 target for renewable energy share. We also continue to increase our recourse to renewable energy, with 82% of ASEAN new power's capacity addition in 2020 deriving from renewable energies. Yet much remains to be done. The work to mobilize investment in financing, access and deploy cross-competitive technologies, and acquire the technical capacity to support clean energy transformation remains a work in progress. I highlight two items for the discussion: the need to improve investment environment for energy transition and to expand beyond our current sources of finance. ASEAN is estimated to require US $367 billion just to achieve its 2035 RE share target for installed power capacity 2025. This is just a fraction of the region's requirement in the next 5 years. The forthcoming 7 ASEAN Energy Outlook and the second ASEAN Renewable Energy Outlook will likely confirm the unprecedented magnitude of overall energy requirements and the need to mitigate high financing costs and ensure adequate finance. The cost of mature RE technologies have declined elsewhere, but high financing costs coupled with the supply intermittency and yet to evolve energy storage capabilities still translate to expensive electricity. By IAEA's estimate, the developing world will need to increase the annual clean energy investment from less than $150 billion in 2020 to over $1 trillion by 2030 to put the world on track to reach net zero emission by 2050. And yet, financing costs in the developing world are effectively 7 times more expensive. If materialized, the $100 billion per year climate finance pledged by developed countries under Paris Agreement could bolster efforts towards an inclusive and just energy transition. ASEAN is determined to face these challenges holistically and across multiple fronts. We anticipate support from key enabling sector or policy areas such as finance, investment and industrial policy, standards and conformance, transport, agriculture, environment and climate. These include, for instance, the initiative by the ASEAN Finance Minister and Central Bank governors to develop a common language for financing green and sustainable initiative to the ongoing ASEAN taxonomy for sustainable finance. Efforts are also underway to enhance carbon pricing instrument in the region. Initially, through the development of measurement, reporting, and verification system done in parallel with some member state efforts to establish the carbon pricing policies and or trading mechanisms. The detailed work to build public policy support and develop partnership with the private sector that will ramp up sustainable energy investment need to proceed in earnest now. I encourage by everyone's resolve to virtually convince today to take further stride in shaping an inclusive and just energy transition. I wish you a most successful day. Thank you very much.
Thank you very much, Dr. Lim. And now, ladies and gentlemen, delivering the next keynote, we welcome Her Excellency Kadri Simpson, European Commissioner for Energy. Your Excellency, please.
Honorable Ministers, dear colleagues, greetings from Brussels. We are on the brink of COP26 negotiations and the call for ambitious climate targets is stronger than ever. The European Union has responded to this call by increasing its greenhouse gas emission reduction target from 40% to at least 55% by 2030. Investments in energy efficiency and renewables are key to deliver the Paris Agreement, while also securing our energy system and lowering energy bills. This is why we have put forward a proposal to reach at least 40% of renewables in our energy mix by 2030 and increasing our energy efficiency target to 36% for primary energy consumption. This means doubling our annual renewables capacity additions from 30 gigawatt last year to at least 60 gigawatt annually in the next 9 years. And this, in turn, means doubling the investment needs, a situation which I believe is similar in the Asian region. Like elsewhere in the world, the COVID crisis has had a negative impact on the European economy. But we should take this as an opportunity to build back better. The European Post-COVID Recovery Fund requires its member states to invest at least 40% of the new financing into climate action. For the EU's long-term budget, this figure is 30%. But public finance alone is not sufficient. Overall, annual energy investments in 2021 to 2030 will need to increase by almost 400 billion euros per year compared to what we invested in the decade up to 2020. To facilitate private investment, we have introduced a taxonomy that puts in place strict criteria for projects and activities that are truly delivering sustainability. This will not only protect private investors from greenwashing, but help companies to become more climate friendly and help shift investments where they are most needed. Today, you are gathered in Singapore, a great example of creating stable economic growth with a strong manufacturing industry and finance sector. The ASEAN region has put forward a joint cooperation plan to support new sustainable investments in energy. The EU and ASEAN are equally concerned about energy security, sustainability, affordability, and connectivity amongst the respective member states, and ensuring a just transition for all. I hope to be able to visit you soon and discuss these issues and our cooperation in more detail. Thank you for your attention.
Thank you, Your Excellency, for your message. Thank you. And now, ladies and gentlemen, we'll move on to the first panel discussion. It is with pleasure that I'll invite all of our panelists, as I mentioned their names, one at a time. Firstly, we have His Excellency Dr. Jao Galamba, Ms. Gauri Singh, Deputy Director General, International Renewable Energy Agency, IRENA, Eugene Cheng, Group Chief Financial Officer, Sembcorp, Seth Tan, Executive Director, Infrastructure Asia. I would also like to mention that they are joined by two virtual panelists, and they are Ulrich Buttersbusch, Deputy Director General, Energy Efficiency, Gaseous Energy Carriers, Heat Networks, Federal Ministry for Economic Affairs and Energy, and Kaveh Zahedi, Deputy Executive, United Nations Economic and Social Commission for Asia and the Pacific. All right. Now, ladies and gentlemen, we will like to invite our moderator, Mr. Luca Tonello, Managing Director, Structured Finance Department, Asia Pacific. He's making his way here right now from SMBC. And of course, he will have the pleasure of this illustrious discussion to manage and moderate this session. Luca, over to you, sir.
Thank you very much. Good afternoon, everyone. Good morning for those who join us in other part of the world. Great pleasure to be here again on this stage at SU. I think this is one of the always maybe not as exciting topic as others, but definitely when we talk about mobilizing capital, is one of the key enabler of how you change behavior of government and private institutions. Certainly, I had experienced that in my own personal career life. So first, maybe to Deputy Minister Galamba, I would like to start with a question to you about what do you think are the top 3 priorities in energy policies today, and how is Portugal responding to those?
Well, good afternoon. Well, the Portugal's energy policy is very committed to renewables. We aim to achieve 47% of renewables in our energy mix and more than 80 in our power system. The 3 top priorities, they would have to be, of course, sustainability, affordability, and security of supply. And we believe that with our experience that we already have managing renewables, Portugal is a country that has managed many days in a row with 100% renewables in its power system. Our TSO is quite knowledgeable about to face this, so we are quite confident that we can move aggressively. And that's what we're doing now, moving as aggressive as we can to decarbonize. In Portugal, there is no doubt that decarbonization is our growth strategy. There is no question about it. So those are our priorities and our main goals.
maybe moving to Deputy Director General Singh. Obviously, IRENA was also hosting this panel. Thank you. And we also heard, saw in your latest report about the positive impact on employment. I think we heard from Minister Ghana about the importance of creating employment through investment in the energy, in the green economy. What can you share from your perspective in the area? How can this help also to stimulate some of the economies in ASEAN post-pandemic?
Thank you and good afternoon. I'm really very happy to be here and share my insights. So thank you, Luca, for that question. We just heard about the very new analysis that got presented by IRENA on the world energy transitions outlook. So one of the key things that's being highlighted is as we move towards the future of a net zero by 2050, electricity is going to be the major carrier of energy, and which means that you're looking at the jobs in the energy sector per se doubling from now to 2050. They are currently around 60 million, and they would go up to around 122 million. So that that's a big jump. But what's also likely to happen is that the green jobs, the renewable energy jobs, will be almost 43 million. So you're looking at a transition not just happening in the employment base, but this whole energy transitions we expect will also unlock the many socio-economic benefits that we hope that the world economy would have. And we estimate that it'll give a catalytic boost of 1.2% to the global GDP, which is clearly something that, this together with jobs is something which I think our political leadership is always very interested. But it's also clear that if we have to move along this very narrow but a very aggressive path of taking us to that future, clearly the investments that are needed are also going to be of a large scale. We're talking something like $4.4 trillion annually going into energy transition technologies. But as we all heard, it's daunting, but it's achievable.
Thank you. Maybe before we move to our panelists, which are joining from Europe, I would like to ask Eugene a question. You are obviously representing the private sector, and from your perspective as investor, as a corporate, right? And with your net zero commitment that you've made, what are the opportunities and challenges that you see from your perspective?
Thank you, Luca. And indeed, it's such a pleasure to be here to talk about Sembcorp's story. I am the Group CFO of Sembcorp Industries, which is one of the sustainability-focused and renewable energy-focused company that's listed on the Singapore Stock Exchange. Now, for us, committing to a net zero emission by 2050 was really a mindset and also a large strategic shift for us, right? We went through a transformation journey from being a engineering industrial business in a marine and oil and gas business to now completely focus in the sectors of renewables and driving sustainable solutions. We have made very ambitious commitments in that process. We say by 2025, a near-term target, we want 70% of our net profit after tax, but before corporate costs, to be coming from sustainable solutions. To do that, we need to quadruple our renewables generation capacity by fourfold, from 2.6 gigawatts currently to 10 gigawatts, increase our sales and development of sustainable urban land from 172 hectares now to 500 hectares, and also make a very, very firm commitment to decarbonize our own generation assets by driving down our carbon intensity down to a 0.4 tons of carbon dioxide per megawatt of generation, right, representing a 25% reduction, and ultimately net zero by 2050. Now, the opportunities are endless, actually. Now, as we look to want to quadruple our renewables capacity, I think one question we ask ourselves is that even possible? But in the key markets that we operate, which is largely China, India, and Southeast Asia, I think what we have seen is that the governments have been very supportive in articulating their own net zero ambitions and also their own willingness to support the transition into renewables growth, giving out a lot of opportunities for us as international private sector participants to bid for projects and ultimately grow that as well. Now, in addition to that, in Singapore itself, this week, EMA has made the announcement that we will be looking to import up to 4 gigawatts of renewable energy. And in response to that, we have also had the opportunity to announce a partnership with PLN Batam, right, as well as Suragen, to set up almost up to 1 gigawatt of a solar facility in Batam, with the intention to have that piped back to Singapore. So, the concerted effort of all the governments to articulate their own transition goals and be very clear in their own carbon targets have also opened up countless opportunities for us. Now, what are the challenges then? I think the first thing as an operator is to think about how could we help these governments, and also ourselves address the issue of intermittency as we start to grow in renewables. Intermittency itself potentially lend itself to curtailment risks, which, as an industrial operator ourselves will face. I think one of the things that we have done in response to that is that we have developed our own battery and storage capabilities out of UK, which we see as a market that allow us to develop these capabilities ahead of the curve for us to bring into service in Asia as we grow the renewables. I think one thing we did say is that the solar facility that we're planning in Batam, right, will be a combination of both solar generation and storage to address intermittency. But of course, a lot of these technologies are still in somewhat infancy stage, and being able to develop, port, and come out with the right protocols and procedures to use them to address intermittency would be important. Now, the next challenge will be a slightly more challenging one, which is really addressing the brown part of our energy generation portfolio. Now, I think in Asia, right, fossil fuels driven energy generation assets still form the base load of energy generation for most economies. For ourselves, it's like we do have fossil fuel generation assets in Singapore, as well as in other parts of ASEAN and in India and China. And more specifically, we do have coal assets in India and in China. So the key question for us is that as we seek to grow and invest into renewables and the new technologies, that will require capital. Our own renewables growth ambitions will require us to raise $5.5 billion in the next 5 years. Now, in relation to these fossil fuel assets, the question then is how could we potentially unlock more equity capital out of them so we could employ these capital into renewables growth as well as driving new technologies investment. And that is something that from my perspective, would have to be a concerted effort between financiers, us as industrial players in making commitment to transit these assets, right? And also with governments to be able to give the necessary support as well. We are quite encouraged that ADB as well as Prudential have come out to say that they are willing to look at the pilot of some of these initiatives, and we are encouraged in that event. Yeah.
Thank you. Very, very interesting. So I hope from our esteemed panelists in Germany, we are able to establish a connection. Yeah, I can see Ulrich there. So I would like to ask him and welcome him also to the panel to maybe share the experience of Europe and Germany, particularly in not only the energy policy, but also the aspects of managing the transition and combining renewable policies with also conventional energy. Over to you, Ulrich.
Yeah, many thanks, Luca, and many thanks also for inviting us to this wonderful conference and panel. We do regret, of course, that we are not on the spot, but that's, of course, due to Corona, still a little bit more complicated, and we had to stay at home. Now, with regard to your question, I think there are three things very, very crucial. The first thing is we need the right framework for investment. And that is always easier said than done. I will come back to that in a minute. The other thing that, and you refer to the experience we have in Germany, is that we absolutely need the support of the whole society for this transition. Without that support, the government cannot enact the right framework. That is, in my view, absolutely crucial. And I do hope that this is in Germany, it will not vanish. We at least can see in all polls that the support is still extremely strong, and that is something where we do hope that it will not change. The third element that I want to mention here is that we do think that international cooperation is of the utmost importance, and here I would like to highlight a point that is maybe not that, let's say, well known with regard to Germany's position when it comes to the energy transition. But our country, as you know, is highly industrialized, and we have lots of energy intensive industries. And this industrial base is not only important for the German economy, I would even say it's also important for the European economy as a whole. And in this context, if we want to get the transition to a carbon neutral economy done by 2045, the German economy will have to import renewable energies to a large extent from European partners, but also internationally. And that refers in principle not only to renewable electricity, but in particular also to renewable gases, and of course, in this context, also hydrogen. So let me come back to the framework that we need for investment, in particular in the renewable sector. As you know, that our EEG, our Renewable Act, has been the fundament of the implementation of renewable investment in Germany. But we see today that on the one hand, there are projects that don't need state support at all at the moment, but we also see that we need more private investment and more a regulatory framework, more conducive to private investment without government support, in particular when it comes to hydrogen. And in this context, the question of PPAs plays a crucial role, and the question of how we define the green element in electricity so that it becomes tradable. That is something that I'm pretty sure the new government will focus on, because we need more private investment. But at the same time, it goes without saying, without the right conducive framework of the state plus support if needed, we will not be able to reach the ambitious goals that we have set to be in a state of climate neutrality by 2045.
Yeah. Thank you. And on the theme of the investment, and in particular in the context of regional connectivity, maybe I would like to move to Kaveh Zaidi on this. If you can comment, Kaveh, about what are the key elements that we should implement, we should see to create that sort of cross-border infrastructure and capital flow, especially in a region like ASEAN.
Thank you very much, Luca. And it's a pleasure to be with you, unfortunately, in this format. But look, let me build on essentially what the previous speaker was saying, because regional and transboundary power system connectivity, we feel is actually a fundamental part of the energy transition, but it's probably one that is not yet getting the attention or the investment that it should, certainly here in Asia. And I say this because increased transmission interconnection between countries can enable the integration of much higher shares of variable renewable energy into the energy mix. And we all know this is something that Asian countries have frankly struggled with. So transmission interconnection, as well as that, of course, it can bring, help to improve and reduce the costs, improve energy security, create new jobs, etc. But despite all of these benefits and despite the need, investment in cross-border energy infrastructure and power grid interconnection in Asia still lags behind other parts of the world, partly maybe because of limited capital of utilities, partly because economic benefits of transmission lines are sort of spread across borders, so making investment harder to justify for very traditional financiers. But we do see options for accelerating the development of cross-border infrastructure in Asia, and we can learn from other regions. Let me just touch on 2 or 3 of these accelerators. I mean, the one accelerator is, of course, that third-party financing. While this kind of financing is well established on the generation side, we're only now seeing transmission lines funded in this way as a way to lower costs, to introduce competition, and to get us, frankly, where we need to go. And we've seen an example in India, which has financed around $5 billion worth of domestic transmission through exactly this kind of a model, using long-term contracts to build and operate transmission lines. And this is a model that has also been used to finance the HVDC Tala line connecting Bhutan to the Indian grid. So there's great potential for third-party financing. There's also great potential for joint ventures. There can be an accelerator, but we have yet to see this in the scale required in the Asian context. We've seen it elsewhere, like in South Africa, the Motraco joint venture between South Africa, Mozambique, and Swaziland for cross-border transmission lines, but very little in our region. A third potential accelerator for this kind of cross-border investment is, of course, traditional PPP. A good example from elsewhere is the EPR, the Empresa Propietaria de la Red, that was designed, engineered, constructed, and actually owns about 230 kilovolt interconnector linking the power grids of Central America. It's basically the backbone of the Central American electric interconnection system. And clearly, Luca, as you asked, in the Southeast Asian context, this is a clear model for Asia to move towards multilateral models of integration. For example, in support of the development of the ASEAN power grid. And let me finish with one last one, which is models that are entirely funded by the private sector, such as merchant lines. We know about the Australia-ASEAN power link, for example, that proposes to deliver solar power from northwestern Australia to Singapore and Indonesia. And the case for projects like this, supported by the so-called anchor tenants, really is growing as declining costs in ultra-high voltage transmission lines make tapping into distant renewable energy resources much more affordable, and also as countries introduce more competitive wholesale markets for their electricity. So frankly, Luca, Asia's energy transition, I think we must accept, is lagging behind other parts of the world. But we feel that financing of cross-border connectivity and power grid interconnection that's designed explicitly to scale up the use of renewable energy could really be one of our untapped possibilities.
Yeah. Thank you. One of the answers maybe actually be in the room here in Singapore, which I know Setan has spent a lot of time with private parties, multilateral, and obviously representing the government here in Singapore in promoting infrastructure and connectivity in this region. So what is the role of multilateral maybe and DFIs can play in this? I think I totally agree that the need to build connectivity is now key.
Thanks, Luca, and thanks for having us. MDBs, or multilateral development banks, have historically been very focused on ESG. So I think in the current season, they're very well positioned to help governments and private sector on climate mitigation and adaptation projects. In Asia in particular, there's a lot of investment interest. But one key issue is the lack of bankable or investable projects. And this is where I think the MDBs can come in a huge way to catalyze together with governments and the private sector to make the environment for more bankable projects happen. Just to give you one number, in 2020, 9 of the largest multilateral development banks in the world, collectively, they only invested about 60 billion in climate finance. And if you look at their investments in less developed countries, it's only 40 billion. But this 40 billion is very, very important because they help to better prepare projects so that they are more bankable. And this, in turn, helps to create the environment for more private sector investments. So some of the $400 billion of green finance bonds and sustainable bonds could come into this part of the asset class because multilaterals prepare them better.
Thank you, sir. Maybe I'd like to go back to Deputy Minister Galamba, Dr. Galamba, on basically what's been the positive experience that you've seen in Portugal, or from your perspective in Europe, in terms of the financing structure, the financing option, whether at the private sector level or international cooperation? What do you think is a successful model for promoting a successful investment in green energy?
Well, in the beginning, investment in renewables depended heavily on feed-in tariffs that put a burden on consumers. Now we're over that, and I think we've learned from that experience. I think Europe in the next probably 2 years would go through a massive experience of blended finance because of the recovery and resilience programs. They will be probably the largest experience in investment in renewables the world has ever seen, because it will be all member states. At least almost 40% of the funds have to be spent on energy transition. So this will be interesting to watch. Our experience, particularly in Portugal, is we have a great story to tell. We have a good track record, and there is an alignment of incentives from the government that wants to decarbonize its economy, from the private sector that wants to decarbonize or either their existing projects or to invest in new green projects, and consumers. And this is very important because an energy transition would not be successful, or it would be too expensive, if we didn't have a good story to tell to consumers. Of course, this is truer in some countries than in others. It's particularly true in mine, because we are very competitive renewables, so it's an easy story to tell. We don't have to convince consumers that this is the way to go. Of course, it's not true everywhere, but in the power sector, this is clearly self-evident. We have no hesitation whatsoever. We will go as fast as we can to decarbonize our power sector with centralized projects, decentralized projects, with betting the priority in Portugal, it's solar. We were early adopters of wind power, but other technologies like offshore wind, which will be quite important in Portugal. But regarding this, we have no hesitation whatsoever. There is no trade-off for Portugal. Our trade-off is to cease importing fuels, ways to generate electricity that are more expensive, that we don't have, and that are more polluting. So for us, it's quite easy on the power sector. Of course, in green hydrogen, it's more challenging. But yes, with the existing gas prices now, at least in Portugal, and green hydrogen, with the existing gas prices, is almost half the price of natural gas. Of course, this is an outlier. This will, what we hope. But in Portugal, it is clear that decarbonization is at the same time energy affordability and growth. And of course, this is what a government wants to have. We can tell a good story on all relevant dimensions. So speed for us is the key point. We want to go as fast as we can.
That's very good to hear about the speed. Maybe if I go back to Gori, from your perspective also, one of the things I also often heard in my experience is obviously the difficulty to implement renewable project because of the cost, right? So cheap electricity and green, can they coexist? How can we, what's the message that we can share with the audience around that?
So I think, Luca, and we've heard this on the panel and in the sessions here, that green financing is really going to be the way forward in terms of reducing the cost of capital, Because right now, if you look at the global profile of how renewable energy projects are financed, there's about 86% comes from the private sources, and that's obviously going to be, that's going to stay. There's about then the 14% that comes from public sector financing from DFIs. Now, the missing part, we think, is that if you look at the equity and debt mix within this, then you're looking at something like about 50% coming from equity and about 22, 23 coming from debt financing. Now, debt financing really has to grow. There has to be much more of that coming into renewable energy projects. But the other very important segment that's really is still on the periphery are the institutional investors. And when you're talking about institutional investors, I mean pension funds, insurance companies, sovereign wealth funds, endowments, foundations, and the like. And if you're looking at that particular segment, which pretty much manage about $100 trillion of assets, they have actually just invested just about 2% in renewable energy. Now, that is where I think we really need to focus. And for governments, it's important to crowd them in, to bring them in. And they won't come, with a business as usual case. You need to be looking at what will draw them in. Is it green bonds, which will bring them in and attract them in? Or looking at maybe the capital market regulations. But I think this is really going to be the key, because getting the cost of finance lowered for renewables is really the way forward.
Thank you. And I think we are quite lucky that we have a very well-known CFO in the energy market who can... I would like to ask you, maybe, Eugene, also quickly from your perspective, not just maybe from the perspective of Sembcorp, which obviously have a lot of options when it comes to raise capital, but what's your maybe advice and view on the availability of capital and the best route to market for companies, from growth companies to established companies, to invest and also to meet your goals of quadrupling your green portfolio?
Thank you. I think in relation to that, I do echo the same thought as Seth and Gauri, right? Tapping upon the private institutional investors market is definitely one key option. And we do see a lot of growing interest for financing green projects as well as green companies who are willing to step up to make very ambitious targets in transiting their own businesses. Now, I think for growth companies, there are always opportunities to look at joint investments with a lot of these very long focus funds, for example, like the Canadian pension funds, who have very reasonable cost of capital and target hurdle rates requirements, and are willing to invest into renewable projects for very, very long periods. But for corporates that are larger, such as ourselves, looking towards this transition, the green capital markets is definitely one option. Now, back to Seth's point, what we ourselves found is that for renewable projects, they tend to lend itself to a little more variability in terms of the quality of PPAs and also in terms of size. So what we know in older style CCGT gas-fired power plants and coal-fired power plants, where they are large, very long-term, high-quality PPAs which lend itself to very easy project financing, is probably less so for renewables in the ASEAN market. So being able to tap on corporate financing and green financing, such as green bonds and sustainability-linked bonds, would be important. I think for ourselves, we also started our own learning journey in the past 6 months, because we have set out very ambitious strategic targets for ourselves to meet. We were able to use those targets to tell the debt investors to say that, hey, we are here, we are driving transition in our own portfolios, we are going to grow renewables and create technologies to for that transition. Through that, we were able to raise $1.1 billion in just the past 6 months, and we were able to achieve very long tenors, in excess of 10 years, and at interest costs that reflects investment grade, and actually at about 10 to 15 basis points savings against our traditional medium-term notes. So clearly, the interest from institutional investors for green and high-quality names that want to raise financing to finance transition is there. And more importantly, they are willing to pay a premium themselves, which means to take a lower yield to know that they are financing a strategy such as this. Yes.
Thank you, Eugene. We have a few minutes before closing, but I'd like to maybe ask a very quick question also to Ulrich and cover about we heard about the role of the private sector, but what can governments do to enable more or unlock more capital? Any suggestion or view from your perspective?
Sure, Luca. I think the key question is the right investment framework. It has all also to do with regulation. Yeah, and I give you the example now of the question of green hydrogen. We need, of course, green electricity for green hydrogen, no doubt about it. But we also need to know what is green electricity, under what circumstances, if you take the electricity from the grid and you still have a mixture of everything, including in Germany brown coal and coal, also lignite and brown and coal. How can you determine, what is green electricity? And the Commission is right now working on that framework in the context of the implementation of the Renewable Energy Directive 2, and that will be very, very important for the investment decisions of companies who want to invest. Because those who want to produce green hydrogen, they need to buy green electricity and they need to know how to get it. And if the framework at the beginning of the market ramp up for hydrogen, for example, is too tight, if the conditions are for proving that you really have renewable electricity, if these conditions are too strict, then we will have difficulties, for investors to take the final investment decision. And so it depends a lot, not only on financial incentives, that's one thing, if necessary, it depends, on the market situation, but it needs the right regulatory framework. And that is what we are discussing now with the Commission. And of course, that goes without saying that at home you need the same, if conditions at home in our member countries in terms of regulation are not ideal and not conducive to these kind of investments, will not see it.
Thank you. Kaveh, from your side, quick comment before we close.
Absolutely, Luca. I mean, I think the government side has been covered perfectly well, and I would say that this same enabling framework that was just spoken about is necessary at the regional level if we're going to have the electricity trade at the scale that we need. An electricity trade that, of course, is driven by renewables. And from our perspective, at the UN ESCAP, our work is driven by a regional roadmap on power system connectivity, a government-endorsed roadmap that has all the strategies needed that can enable an increased and sustainable power system connectivity across the region. And we're already putting this to good use. For example, in the context of Northeast Asia, we're working to develop a vision for a green power corridor, which will demonstrate how cross-border power system connectivity can actually support sustainable development, national policy goals, and in particular, of course, the net zero emissions targets that are being set by so many countries, including Korea, Japan, and China. And we look forward to rolling that out, including hand in hand with the Green Grids Initiative that's going to be launched at COP. So that same enabling framework that has been so important in countries like Germany actually needs to be seen at the sub-regional and the regional level for us to really be able to tap into the regional renewable energy markets.
Thank you, Kaveh. Thank you. And last question for Seth. Since the hydrogen was mentioned and a number of new technology were also mentioned yesterday, carbon capture, we heard from Exxon. Are we ready to finance the new technologies or it takes a bit longer for investors to get ready?
I think there's the short, medium, and long. but huge amounts of institutional investments interest in all aspects. Recently, we reached out to our community, and over 180 of them responded. And most of them said that I asked them, what are you going to spend your money in? And half of them are looking at green financing, and equal number is looking at energy transition. Of course, they are long-term investors. They are looking at e-hydrogen and e-ammonia. But in the shorter term, don't forget about the newer forms of renewables like floating solar, smart grid, energy storage. I think this will form the bridge, if you like, to help us in energy transition.
Thank you, Seth. I think we have probably reached the conclusion of our panel. I would like to thank, of course, our distinguished panelists for joining in Singapore and elsewhere. And of course, for IRENA and SU for hosting, and thank you.
Thank you very much, panelists. And thank you, Luca Tonello, for managing this session as well.